And there's your limit order, TP hit, W's in the chat. Oops. All right, I'm long inside this fair value gap, small down close candle. Stop loss should be beneath consequent encroachment of this inefficiency. I prefer to see the lower half of that stay open. And then I'm aiming for the buy side at around 21,430. Risk comes off if we can reach this new day opening gap or new week opening gap. Can't really remember which. I treat them all the same, but risk comes off or gets reduced should we tag that level. And then this faded gray line here, that is previous week's low. So that's in major pool of liquidity. Yes, we have buy side here, but previous week's low, there is large liquidity regardless if we already traded above it and beneath it, above and beneath it. I'm looking to see if we can tag that. I'm also watching this wick, this long wick. I want to see that be used as support. Seeing that as just a normal inefficiency. I'm not seeing anything wrong with trading back beneath that 830 open. If anything, that's a good thing. So my thought process is whenever we're trading down beneath that 830 open, that's a short-term discount. We know that the best long opportunities are beneath the midnight open and beneath the 830 open. So I don't see that as a problem that is wicking down there. Just fell short of previous week's low. I wanted to see that tagged. Now that right there, that's not acceptable. So at this point in time, we're trading to consequent encroachment of the new week opening gap, this regular buy side imbalance, sell side inefficiency, and pretty much the low of this fair value gap. It goes without saying, if we don't find support here, then the trade's probably no good. And if we go back to the 5-minute chart, we just touched the high of that bullish order block. And then you have this balanced price range with this single pass up and this single pass down. So anything beneath all that is kind of problematic. Yeah, it's looking a little too heavy. There's no point in closing it early. It's already like a couple handles away from my stop. Just submitting to the trade. It is trading inside that fair value gap around consequent encroachment. We're trading down inside of discount PD arrays on the 5-minute chart. And again, that 5-minute order block. Ten a.m. news just continues to send price narrative. The 10 a.m. news, that can be manipulation or a continuation. It really depends on where the liquidity is. If we have relative equal highs above us and 10 a.m. news spikes us higher, then I'll be expecting that to be used as continuation. But if we have, like let's say we have relative equal highs, 10 a.m. news spikes us up above those equal highs, then I'll possibly be expecting 10 o'clock to possibly be like a Judas swing. That was just engaging the liquidity, and then the real move going lower will be post 10 a.m. and that 10 o'clock manipulation was just like a Judas swing. That's kind of how I interpret it. But because my focus is the new week opening gap, old weekly low in the buy side, that 10 o'clock push is really down here. That 10 o'clock push, I want to see possibly that buy side up there. But obviously this deep retracement is problematic. We traded down in this candle, tapping consequent encroachment of that new week opening gap. Again, this is really my last line of defense for higher prices because we traded down to the order block. We're at the low of the balanced price range. And then we're hanging around consequent encroachment of this fair value gap. So like I said, anything lower than this is really kind of kills the narrative. Here's midpoint of that fair value gap, dropping down into it. So that's why my stop loss is beneath it. Now I'm watching this fair value gap. Obviously, because I'm long and because I'm looking for higher prices, I would prefer this fair value gap to be used as an inversion level, meaning close above it, next candle open, trade down, use it as support. Or if you just run through it entirely, which is really strong, really bullish, then obviously that's a bullish signature. And as far as my risk, the same rules apply. Moving my stop to break even should we reach the new week opening gap low, because same thing we saw in our short down here. We saw the reaction after trading to the new week opening gap. We always reverse from there. Not always, but it's key levels of retracements and reversal points. So if we tag that up here, I'm going to trim my risk just a little bit. Move this out the way. So there's that old weekly low. Again, that's a major pool of liquidity. That's like engaging fresh new buy side. I do want to see us tag the new week opening gap. I'm going to trail my stop just a little bit, see if I could slowly trim my risk beneath mean threshold of this down close candle. Midpoint is about right there, so that's fine. And again, I don't want to be too aggressive with my stop because we're forming a fair value gap here, which ideally I want to see that stay open. But should NASDAQ want to have a normal retracement, I don't want to get myself out of a good trade simply because I was in a rush to move my stop. So my stop loss is beneath the inversion fair value gap. Taking off, originally it was around 140 ticks or so. So trimming off about 100 ticks of risk, which is awesome. And if we can reach a little higher in that new week opening gap, then I'll feel comfortable moving my stop to break even. I'm not in a rush to do it yet, but if we can expand just a little higher. At this point, like if price were to come back towards my stop, at that point it's no big deal because we had that one little micro win. So it'll bring me pretty much to break even on the day basically, because that small little, I'm really calling this a scratch. I'm not even really counting that for real. So with my stop here, if it were to get tagged, it brings me back to break even on the day. trimming here, watching this fair value gap. And the bullish order block, these two down close candles. I want to see this stay open. If it gets tagged, then it gets tagged. But same thing we talked about down here. It's the same logic up here. And then you combine that with the fact that we're having an inside range day, being aggressive with my stop. And this is the logic. Fair value gap, I prefer to see that stay open, but we have this upper fair value gap here. I want to see that take us higher, and it's overlapping with the bullish order block. But because we've already tagged a major liquidity pool, previous week's low, and we've traded beautifully the consequent encroachment of that new week opening gap, I'm trimming off my risk here. But I still would like to see support from the order block and the fair value gap, because buy side is my main focus. I'm not planning on taking any partials. I want just the full pull towards that target. So I'm submitting to that. There's a lot of educational bits and pieces here. Partials and stop loss management. It's a good stream. It's a good stream. So you can see us working the low of that new week opening gap. NASDAQ so far showing a little bit of struggle getting above that, but I'm watching that blue shaded fair value gap. If we can stay above that, use it as support, then I think the trade is still liable. But new week opening gaps and new day opening gaps, those are great levels for partials or to just close your full position, because we see the reaction at those levels. It happens every day. No, this really has been the perfect day to it's a lot that already happened, and it's only like about 10:15. Catch up on the chat. Haven't been reading it that much. Hold on. Tapping the low of that fair value gap. Have you noticed in the days after big movements like we had other night, price wants to recover some? I'm not wondering. Yeah, I have noticed, like if we dropped down 1,000 handles yesterday, the next day we would like to retrace a little bit into that range. Yeah, that happens pretty frequently, because rarely would you see like 1,000 handle drop yesterday, and then the following day you'll see another 500 handle drop. Like the next morning it'll either consolidate or you'll see a retracement into a portion of that range that dropped so much. Absolutely. Why not front run that fair value gap if you're expecting it to stay open? Front run that fair value gap if you're expecting it to stay open. What you talking about, Tony? Front run that fair value gap if you're expecting it to stay open. Why do you trade FOMC day? FOMC is tomorrow. FOMC isn't today. FOMC is tomorrow. I might leave a runner. Best price action all January. So notice the work, the bodies. That new week opening gap is holding price. So I'm really comfortable having my stop at break even. And then just for good measure, one small little micro partial. It doesn't hurt nobody, right? Oh, I will be. Yeah, I'm trading tomorrow. I'm trading tomorrow with a lot of caution. A lot of caution. Because if we have FOMC in the afternoon, the morning session can just generate liquidity, chop around. It could be a little bit more lethargic because everybody's waiting for the funds rate announcement. So tomorrow I will be streaming. We'll be live streaming and trading, but I may just look for a 10 a.m. to 11 o'clock silver bullet, try to get in, get out, maybe a simple 2-to-1 risk to reward. I'm not looking for a groundbreaking, earth-shattering win tomorrow ahead of FOMC. This is the biggest drop in history. Is it? I mean, obviously you had like the 9/11 stuff and all that. But yeah, 1,000-point sell-off that's something. It's pretty crazy. Only if we displace above the new week opening gap will I feel comfortable trailing my stop a little higher. But as long as price is being held inside of it, I don't want to trail it too tight because it's being held right here. For the last 10 minutes or so, we haven't been able to get above it. But if we do so, then I feel comfortable trailing it up because I am looking at that buy side still. Man, people who caught that sell yesterday before the drop, somebody retired their parents off of that move. Like somebody quit their job, didn't even put in the 2 weeks and retired their parents. That drop was crazy. But it happened during Asia. Like like right when we got our new day opening gap, or it was a new week opening gap during Asia, like it just melted. Like it was just gone. It should be up here. Small partial, doesn't hurt nobody. 2 out of 10, we'll let the rest ride. Trailing my stop beneath this down close candle, that order block. So trailing my stop, the low of this candle comes in at 59 even. We're going to do this in case NASDAQ wants to keep going. We'll take 7 off here, and then we'll just trail the runner, and I'll just answer a bunch of questions and whatnot. But the low of this candle comes in at 59, so we'll trail our stop to 59. Close enough. And there's your limit order. TP hit. W's in the chat. Stop loss management explained. Fair value gaps staying open explained. Consequent encroachment, new week opening gap. All that fun jazz. Let's bump this up a little bit and let's see if we can find more targets. Dubs, dubs, dubs. Big dubs. Good week, good week. Let's see. Let's go to a daily chart. Let's just see if we have any new day opening gaps or new week opening gaps that we can target. And that'll probably be my terminus. So the closest new week opening gap, and we may not get this. This is just a best case scenario. The closest new week opening gap is up here. And my limit order is pretty much right at the low. And that'll be my exit. I'll be content with that. Do I feel any type of way that I didn't take this on my live account? Do I feel any sort of regret, any kind of FOMO? Do I want to jump in here on my live account and start pressing buttons? Absolutely not. Okay, whenever you have days like this, like let's say You just blew your top step combine, or you just had a losing day, or whatever, and you decide to paper trade. And then all of a sudden you catch a beautiful win on paper. That's not an opportunity to beat yourself up. See, the moment I switch to paper, I catch a nice win. No, you're thinking about it the wrong way. This is the time when you use it as, exactly, 20, use it as a confidence builder. So flip your mindset. Instead of saying, oh, it's on paper. It was on paper. It doesn't mean anything. I could have made 2% of my combine, but I took it on demo. Instead, flip it. Say, I walked this thing through. Yes, it's on demo, but I called it candle by candlestick. The stop loss placement was top tier. And although I didn't make anything, I gained a whole lot of experience and confidence. So now whenever I make the decision to jump back into a combine or evaluation or live account, whatever the case may be, I've gained confidence from this trade. You didn't over leverage, even though it's paper. You didn't gamble. You didn't FOMO, none of that. So that's how you view stuff like this. Because I'll see people post in the Discord, I took the same trade, but it was on demo. It's like, there's nothing wrong with that. You gained experience. You had a great outlook on price. And you may have not have profited on that, but you still gain experience. And experience is what really is going to take you to the next level in the long run. Short-term gain, like if I would have taken this trade on my live account, that short-term gain would have been nice, sure. But this is a nice confidence builder. It's a nice experience builder. I'm working on leaving runners to reasonable targets. I worked on stop loss management, all those things. So it's all perspective, man. Yeah, I'm paper trading until February. Probably from now on, I'm gonna adopt ICT's rule, not rule, but just his approach to trading the new year. He kind of lets January pass without him. He kind of lets January do its thing, chop people up, and then he hops in February, and that's when he really does his live trading. So I'm gonna kind of adopt that style next year. So I'm implementing that now, even though I did trade pretty much half of January. I'm putting my live account on the back burner until February. But regardless, live account, paper account, I'm still calling it live, still walking it through. It really doesn't make a difference. That's why I don't get why people say ICT is trading paper. He's calling it live. Paper, plastic, steel, metal, like it doesn't. He's calling it live. It doesn't change anything. All these fair value guys staying open. I like that. And I'm not worried about my stop loss all the way down here. I'm not touching it. It's absolute beauty. I have such a problem not letting trades run to targets. Yeah, I mean, I'm still working on leaving runners and doing all that, but it's just a gradual thing. It's like going to the gym. It's something you have to work on. It's something you have to, like, it's a muscle. You don't just automatically get comfortable leaving runners. That's something you just have to work on over time. Just leave a small little micro on, and if it comes back and stops you out, no big deal, but it's just a practice. I just now started leaving runners and using micros to take partials, like, because I want to capture larger moves. But old me last year would look for entry here, maybe get out at buy side and call it a day, and that's a great trade. Don't get me wrong. There's nothing wrong with doing that, but I want to start capturing more of that daily candle, and you only do that by just leaving your trade alone. So even though this is paper, it's still something that I'm practicing and that I'm working on. And if price were to do this and come all the way back down, stop me out, I'm not feeling any type of way about that, because I'm giving myself a pat on the back for even attempting to leave a runner, because that's going to help your equity curve in the long run, regardless if it comes back and stops you out. Just a little more. There we go. And that concludes the morning session. Love y'all, man. Be safe. See you tomorrow at 9:30. All right. Peace.